So we're talking about Fintech Landscape, investment, collaboration, times of transition. And I would like to start with a short round of introduction, maybe not only about yourself, but also about, let's say, your company and how it is connected to Fintech. And not only introduction, I also want to get one number from you. Between 1 and 10, how optimistic and excited you are about Fintech in 2025. So 1, not at all, 10, absolutely thrilled. So let's start from left to right. Reggie.
I mean, as a Fintech investor, I have to say 10 out of 10.
Perfect.
Look, I think I'm very excited what's in store for us in 2025. Short about Augmentum, we're a Fintech-focused venture capital firm based out of London, investing with a European mandate. Average ticket size is about 5 to 15 million. And we're in companies in Germany such as Grover or Baobab. And so, yeah, very excited to be here and share this moment with my fellow colleagues.
Great, thank you. It's great to be here as well. My number is 9.837. And
as a banker, actually.
As a banker, approximately. So I'm very optimistic on Fintech and overall the VC landscape. My name is Joerg Landsch. I have the pleasure heading Central Corporate Venture Capital at Deutsche Bank. I'm also in the board of the German PE and VC Association, representing the VCs and the CVCs. And from a bank perspective, we invest mainly in Series A, Series B companies, enterprise tech, and Fintech.
Yeah, good morning, everybody. My name is Julian Ostertag. I'm a co-founder and managing partner of Drakestar. We're basically a tech investment bank focusing on M&A and fundraising. So we help companies like fintechs to raise capital or work with big banks together. And I'm actually coming from the traditional banking industry, so I have 8 years of traditional banking experience with me. So I would say I fairly know both sides very well. My expectation is an 8, just because we see activity picking up, both fundraising and M&A, but we're going to come to that.
Perfect. Hélène.
Hélène Falchier, I'm general partner at Portage. So Portage is a global fintech fund. 1/3 of the team is based in Canada, 1/3 in the US, and 1/3 in Europe. So I cover Europe for Portage. What we are doing is only fintech investment, everything around wealth management, asset management, payment, insurtech. It could be B2B and be direct to consumer, B2C. We invest between late stage to early Series C, so ticket size between 4 to 20 million, roughly. And what we like, it's really to add value to our portfolio companies, and we have a strong value creation team and partnership team. I think we will come back on that. Nice to be here with you, and I think there is great content, and super excited by fintech for this year. So 10 out of 10.
10 out of 10. Okay. So then we have to go. Absolutely. That's what I want to have. So then we have to go a little bit deeper into it. A great kind of optimism. What makes you such optimistic? I mean, we have about, what I say, 10 years of, let's say, fintech now, or we want to define it. So a lot of business models, some kind of, let's say, VC depression over the last 2-3 years. So what makes you optimistic? What is the new things coming up where you're keen on?
I mean, I have probably 2 numbers for you. When you think about financial services, fintechs only grab 7% of the profit pools of financial services. So I'm extremely excited about what's more to come for kind of the early stage startups building. And the second is, look, even if some more generalist funds will say fintech is dead, fintech represents 17% of all European VC funding, which is back to kind of pre-COVID times. So for me, 2020, 2021 were a bit anomalies. A lot of capital were flooding the markets, but we're back to kind of normal times. People are building, and we see an ecosystem which is maturing. So extremely excited.
Okay. From a maybe also corporate side, I mean...
Sure, so we just published a study which called the VC 2024, and it's the headline was a partial rebound. And why was it a partial rebound? So when you look at actually where we are right now at this moment, VC activity has peaked again. So after 2.5 years of quarter-over-quarter decline, we have now seen in 2024 quite an uptick in terms of the VC numbers overall, and in particular in the fourth quarter. The big driver, obviously, and I'm not sure if anyone talked about it here at all, but it is AI. So AI mega rounds obviously was a big driver of those numbers. But the second part, which makes me very optimistic, is as well Europe. When you look at Europe, Europe is now the second largest VC hub. So before it was Asia, so US is obviously dominating. And we can talk about this one a little bit more, obviously. I think Christiane Riley gave yesterday as well a speech in terms of the US competitiveness right now and Silicon Valley dominance. But what we have seen last year is that European is now the second largest VC hub in the world, overpassing Asia. And here again, we have now 15 billion of VC funding in the market, which is a slight growth as well compared to last year, as well a rebound. So from that fundamental, I'm very optimistic. I think my deduction, and that's why it's only 9.873, is the exit market. So we don't see yet the distributions. So the IPOs, you talked about M&A, obviously. That is something where globally we haven't seen that rebound yet. Very optimistic that we'll see this cycle as well kicking in. So fresh numbers and fresh capital will come in. So that is a foundation for my optimism here.
Joe, can you back that? I mean, you see a lot of, let's say, secondary and exit transactions coming, or a lot of them. Do you see them already, or is it, as we see, or as Joerg said, still some kind of, let's say, down market?
I would say it's a very heterogeneous market, right? So we see funding picked up, M&A is picking up as well, but it's very different in different sectors. Payment is very strong. 40–50% of transactions we see in M&A is payment, while insurtech is down, right? So they're very different markets where it has picked up. But then we also see a lot of changing investment focus from VCs to private equities. While a lot of people were funding or buying B2C fintechs, so actually fintechs competing directly with banks and insurances, we now see a huge shift to B2B software businesses that actually enable banks and insurances to digitize themselves, right? Or try to digitize themselves. So I think it really depends. I think also what we have seen as a key value driver 2–3 years ago was growth. If you're growing by 80–90%, you get a high multiple. Now it's EBITDA, right? People want to see that you have become profitable, especially the PE investors really focus on that. On the other side, I think what we also need, and I'm very optimistic about it, is fintech IPOs. We published a list of 30 companies, and I know if you talk about IPOs, people roll their eyes and say, we've never seen that, only in the US, but I feel it's coming. Companies like Stripe, Klarna, and others have announced they will do it. Maybe not in Europe, maybe in the US, big disadvantage, but it's happening, and we need it, because I believe some of those companies are going to be multi-billion-dollar market cap companies, and that will, again, foster M&A activity. So I'm really looking forward to that, but I'm also optimistic that this will happen.
Yeah, good to see. I mean, we had last evening also Thomas from Raisin. He was a little bit reluctant about this year IPO, but maybe he has to be, but I think also some German players that have the potential to go there, Maybe coming to the also EU-US perspective, which you within your fund also can manage. I mean, I think last week or the week before there was the news that A16Z is closing down the London office and doing now all crypto back in the US. So from that point of view, could make, okay, there is a shift back to the US. I also agree that Europe is still strong. What is your view on that about fintech market?
I think it's pretty interesting to see the maturity of the market in Europe now, and we are at a great shifting point, I think, in Europe. That's why we took the decision to increase our coverage in Europe and to have more people on the ground, because we think this is a great timing to invest more in Europe. So, and we are global, so this is always a lot of debate internally, but it's interesting. But in terms of exit, it's true that we will have some exit this year in our portfolio, because we are already working on it, so it's coming, but mainly on the US portfolio, not yet on the European side, but it's coming. And it's really interesting to see that it was more difficult for European companies to adapt to growth with efficiency after having this few years about growth at whatever costs. So it was more difficult to adjust, but I think European companies are there now, when in the US the adaptation was really quick. So, and I think now we see that some really good growth and growth with good unit economics. But we have to keep growth in mind and not only efficiency.
Perfect. Exactly what I wanted to say. I mean, efficiency is good, but without growth, there's still nothing to win, actually. Yeah. So, I mean, in talks we had before, as I said, is that also, let's say, one of the aspects that you see now the fintech market getting more mature and getting a more, let's say, sustainable way of doing the business? Is this something we can, to wrap it up for the last years?
I mean, what represents a market which is considered mature? I think one is regulated that's open for innovation. Mm-hmm. Two is to see actually new innovation being started. Just to give you an idea, last week with Augmentum, we saw 5 companies built by ex-Revoluts who are starting kind of their own venture. Mm. So they're leaving some money on the table from options that could go really, really high. And they say, look, I see here a universe where building blocks are here, I can assemble them to build my next new thing. Both in B2C and in B2B. And in 3, I think seeing a market where M&A and money flows back into the ecosystem is probably also a point that I would mention. And then the last point is I've never been more excited about how quality angels can also back early stage startups. Mm-hmm. Now some corporates are giving a kind of a free pass to their senior executives to be able to invest in those startups, bring their knowledge and their network to work. So I think I'm quite excited about that.
Mm-hmm. And the ingredients are there, right? I think you mentioned it earlier a bit. We have now venture capital funds who have really capital in their pockets. Yes. So we have now VC funds which are $1 billion. That didn't exist a couple of years ago. Yeah. So that kind of capital, in particular scale-ups, will come into the market. Mm-hmm. Nicolas Baer talked yesterday, European Investment Bank, talked yesterday about the ETCI program. Which is another $4 billion into the market. So that kind of, all that push is currently happening into the market, and you can see now on the ground in terms of how that kind of capital will be deployed. And it needs to be deployed in Europe. Mm-hmm. So therefore, I'm very strong on that European part. I see aber as well, since you talked about US and Europe, and worked obviously 10 years in New York and in the Valley, there are a couple of differences in terms of how we, from my perspective, currently look at a few things. I think on the AI side, we are very much similar. You can say they are maybe a little bit ahead, but me personally, I believe we haven't, definitely not like with cloud or with other technologies, we haven't lost that bandwagon. But one area where we have fundamentally different views at the moment is climate. And that obviously is a big impact for fintech as well. You can say ESG, climate investment, deep tech investments, where with the new Trump administration, and actually already with that election, they almost stopped it. With all the VCs I'm talking to in the US, and these are many, they really reduce their investment significantly in climate. And I think that is as well something I think we should see this one as an opportunity. And I think that is as well something where I think we from Europe can step up and make a difference.
Good point. When we go more, let's say, really into the topics. So you said now clean tech, fintech is one of the aspects. What other kind of, let's say, business models, aspects you see currently on fintech? Let's say drive you crazy, or what is the things that you're now keen on to invest? I mean, is it all AI? Is it? I mean, from my point of view, in Europe, it's quite interesting to see that there's also some kind of regulatory push. Yeah, I mean, FIDA was kind of up and down over the last hours, actually, but nevertheless. But also, I mean, we heard now about digital currencies, digital euro. So, what are the topics you are currently looking into it? When it comes to fintech?
I mean, maybe one point I want to make at first, from the get-go, is like financial services have not waited for AI to come to use data. And like we at Augmentum, we're super focused on, okay, you guys are probably technologists, but what is the actual business use case? Yeah. And where we see a lot of use cases for some of the breakthrough technologies that we see is wealth management. Mm-hmm. It's a topic that we as a fund have pushed a lot. We've had 2 successful exits in the past in that space. Of which 2 of them have been actually sold to incumbents. So one to Aberdeen and one to NatWest. Mm-hmm. So there is definitely an appetite for later stage for incumbent players to actually be more acquisitive in that space. Mm-hmm. we're a bit underweight in terms of portfolio construction there, but we're super excited about what's to come. And I think Portage as well has a strong bias towards wealth management.
Yes, definitely. Because there is this demographic, shift, and so it's really good time to invest in wealth management. Direct to consumer, this is always a play of AUM, so sometimes really difficult to get at scale and get good unit economics. And I think all the bank and wealth manager in this conference are better place, to build something really, really relevant. But on the B2B software, I think you can really help, having more use of tools and these kind of things for wealth manager and asset manager in this space. Yeah.
So I agree with that.
In terms of AI, I think verticalized AI is something really relevant. So you need to work on use case because, AI could be everywhere, but what you are doing with that.
What is the core case? Okay.
No, just to add to that, I think for everything in technology, AI is a game changer. I know most people in banks feel that AI is being used in a chatbot. That's nice. But we see funds, technology funds, investing in traditional software businesses that say in 10, 15 years, half of our software businesses will not be there because AI fundamentally changes how you develop a software stack, right? And we now have the first fintech candidates that are going to an IPO, but we also see a much larger number percentage-wise going into seed money in fintech, which shows there's a new need for new technology companies. And it's often founders who already started a business, sold a business, are going back to founding a business, and not just because they're good at it, because they see a lot of opportunities in the market. And I think with the new technologies, everything is going to change. Everything, whether it's B2C, whether it's B2B, how you build a software, how you interact with the customer, what do you do with your data? Or are you actually doing something with your data? All those things will change and in a much more rapid speed than it has happened with traditional technology.
I think the point of speed is really interesting. We see teams being able to build businesses and technology really, really, really fast. Just to give you an idea, we spoke to a company last week. They went from 0 to 4 million of revenue in 12 months. Like, let that sink in for a second. And just the speed at which people can build tech and use bricks and pieces that are already there, assemble it, like, it's very, very impressive. And so for us as VCs, I think the bar is extremely high when we talk to some founders.
Yeah, I agree.
I think this is also super interesting for corporate VC because now technology is on the shelf. And you can really use it pretty easily. So you don't need to have a big tech team and engineering team internally to being able to implement some good innovation in banks and in a lot of corporates.
Absolutely, and maybe to build on that one. From my personal perspective, so we talked about AI, maybe quickly breaking it down. So foundation layer, I think that's from my perspective not the focus of our investment team. But we are focusing on the application layer, vertical application layer, but then as well, a topic which, from my perspective, is very often not looked too much at from an AI perspective, is that I call it the environment layer. So what kind of risk frameworks do you need? What kind of governance do you need? What kind of security do you need? So what kind of framework do you need that an AI model is governed and risk managed within your organization? And I think here banks can make a really, really big impact since we have that kind of thinking in our DNA. So that's number one from an AI perspective. What other two areas I'm excited about? Climate, I mentioned earlier. And the third area is security. I think we will see, from my perspective, in the next couple of years, way more security companies built and founded in Europe. And I think that is something where, as well, banks are the natural partner as a trusted organization in the first glance. So we did last year 2 cybersecurity investments in that field for exactly that purpose. So those would be my 3 long points: AI, ESG or climate, and security.
Perfect. So perfect. Let's say also next step, as we also should talk about collaboration. I mean, you mentioned speed. Maybe there's a different definition of speed in banks and in startups. But nevertheless, in terms of collaboration, and I totally agree, purely believer of the asset class of CVC because I see so much value in it. Nevertheless, there's also still some challenges when you, let's say, connect startups with banks. Maybe we start with the, let's say, outside view as the independent investor, having fintechs that are also, let's say, dealing and cooperating with banks. What is your current view on, let's say, also the ability of the banks to adopt and to work together with startups?
So I could speak an entire panel just on that topic.
True. So, I mean, we said we have about 3 hours, so no issue.
I think there are a couple of points. One, just tech is not the biggest hurdle for people innovating in financial services. Like building lines of code and building products is not what is slowing people down. What is slowing people down is just internal processes. So I think for anyone thinking about their own organization here, it should be about how am I making my processes more efficient so that I can work with the outside world or even build internally if that's my decision. Two, I think the big issue as well I see with a lot of the founders I speak to outside of the portfolio is that normally when they start to interact with a large partner, they are cornered into the innovation department. And the innovation department in some instances has zero decision power. It's kind of, it's kind of a laboratory and it never makes into a business use case. And then the third point is the large executives are not incentivized today to work with external innovators, which I think is a real pity because that's what's going to really drive innovation within departments. I was talking to a founder earlier and he says, look, I was able to attract great talent from incumbents, not because we pay them more, because we pay them way less, but just because what they are building actually makes it into production. Yeah. I mean, that's for me a good testimony of what we should be doing. Yeah.
So, are your executives incentivized to work together with?
They are definitely incentivized. I think I can underscore a lot what you said, and what we do is we have a specific, we call it business development team, making sure that the startups in our portfolio are actually working with the bank. So in our instance, we have 30 companies, 31 now actually. One will be announced next week, hopefully, in our portfolio. And 86% either meet or exceed the strategic value. So 86% of those investments either meet or exceed. You mentioned Thomas earlier, obviously Raisin is part of our portfolio. Zinsmarkt, the German Zinsmarkt, so when you go into there, they're integrated. And there are usually two ways how we deal with startups in our portfolio. It's either we use them as a vendor, security, we talked earlier about AI, we talked earlier about a few of our partners actually here as well, Aleph Alpha is over there, Codex AI is as well running around here today, so we're working with those partners. And secondly, we're offering it to our clients. So I think Raisin is one of those examples. Is there red tape? I think that's what you mentioned in the organization, in the process. Yes, but I think there needs to be as well a little bit of understanding in terms of why is there a vendor risk management process? Am I a huge fan of it? No, but actually, when you flip it, there's a good reason for it in terms of.
I think there's a risk management process that can last 3 months versus 18 months.
Yes.
And so that's kind of that delta everywhere, right?
And I think that is the speed part, or that is where I think you need to be transparent as well at the beginning, right? Yeah. So we changed it 18 months ago, where we said, okay, those are the questions we need. I think it's 180, but we need those 180, at least being upfront with it, putting it out, and not salami. You know it probably well from your portfolio companies as well. You fill something out, a month later you get feedback, another 20 questions, and another 50 questions, and then somehow a year is gone and nothing has happened, right? So I think that kind of expectation needs to be done at the beginning, but I think the expectation management needs to be done as well, that those processes, there's a reason for those processes, for the security, to keep the data privacy and the cybersecurity as well intact. So I think that is important as well when dealing with the startups, to have that kind of expectation management in mind.
I think there is two things as well. So the investment time is not the same than the partnership time. Mm-hmm. This is a long time, the partnership time. So sometimes it's difficult to have everything or every skill set in one team. Mm-hmm. So that's why we took the decision since the beginning to have two teams. So there is the investment team and we have the partnership team. So, and not the same DNA, not the same timeline, and so our partnership teams have really designed a playbook. So we act like an open CVC, so with multiple corporates, and so they have really built this playbook, and they push to the corporate they are in contact with only strategic things. Not all the things we see in fintech, because I think it's too many, and it's too many to digest and to really implement, but only strategic things make sense. And there is a flywheel effect, because we can deliver, top quartile return, but also strategic return for our investors. And this is really where we build something between these pillars of being an investor, but also being a corporate partner for us.
Very good, very good. Actually, time's up, and I think we could continue for half an hour or even more. But just want to, one thing to Julian. I mean, the one thing is CVC side to getting, let's say, a foot into the door, start collaborations. Do you see also a shift within the banks in terms of strategic acquisitions? So more like, is there a more strategic view on M&A to fintech when you're talking about banks? Is there some shift, or still some way to go?
I think there's still, actually not some way to go, I think there's still a long way to go. I think that actually bringing together banks and fintechs makes a lot of sense, right? Banks have the balance sheet, the size, the scale, the regulation, the products, the customers, but they have very little when it comes to technology and innovation, and then you got the fintechs who have the technology and innovation. I honestly believe there's still a lack of awareness of banks, what's going on, right? I'm going to mention the famous ECB study. Sorry, I already... There was an ECB study 2 years ago, and the big, I think, positive title was to say over 50% of banks are working on developing a digitization strategy. So there were many different words, but it actually meant, well, they don't have a strategy yet, right? They're working on a strategy, but they don't have. If you consider the other part, well, it's probably 80 to 90% of banks don't have a digitization strategy. How can you buy businesses if you don't know what your strategy is? So, and I give you one, there were all technologies mentioned, but there was a great example. People were looking at cloud and API and working on it. On AI, the statement was, over 50% are already using some sort of AI, mainly chatbots and credit scoring. When they were asked how relevant this technology for you is, over 80% said, not relevant for us. And I think that's a misperception. I mean, if 80% believe AI is not important for our business model, then don't go out there and buy technology companies. You don't know what to do with them, right? Yeah. So I think this is still a requirement for any action. You need to understand what's going on. And I think we're still pretty far away. I know you guys, the CVC guys are there, but everybody else, I think, I'm not sure.
Yeah. Very important to mention that Deutsche Bank and Commerzbank were not part of that. Definitely
yes,
not.
Absolutely.
So as I said, time is up. Just a quick one in the end. To all of you, what will surprise us in 2025? One thing that we might not expect, but it will happen. I mean, I guess it's more like glass ball, but you're the experts, so go for it.
Look, I'm very hopeful there's going to be an IPO of a tech-first lender. In the VC world, lending has been a bit forgotten or out of fashion, and I think we'll see probably a regain or a rebirth of the category because of that, because we'll see multiples which trades much higher than traditional lenders, and so suddenly VCs will think, hey, actually lending is cool. So yeah, that's probably one of my predictions.
Okay.
I think it's climate, which will not go into the rabbit hole as expected. I think it will be here for long.
I think everything around AI and climate, fintech, for example, are going to be big topics. I think overall there are not going to be too many surprises, except, I mean, from a banking view, yes, fintechs are here to stay, and they will stay, and some of them will have a market cap that's bigger than your own. I think on the fintech side, it's really the speed that's happening, and that will surprise a lot of older fintechs as well, right? If you're 10-year-old, that's already an older technology stack. They will be surprised as well what's happening now.
Okay. Hélène?
So a euro stablecoin would be a great, a great innovation, you know, for payment in Europe. So really happy to have this discussion about digital euro, but we need to go further, and not only the digital euro, but stablecoin, euro stablecoin would be. Yeah,
that's your wake-up call for the.
Perfect. So, in the end, a lot of optimism there, a lot of markets still to be tackled by fintechs and banks. And with that, thanks all of you for sharing your insights. Have you a wonderful rest of the event, and then we are done.
Well, thank you for a fantastic panel. Thank you to all.